This is Alan. He's an accountant and tax expert that works with creators and creator-led businesses.
You're probably leaving hundreds of thousands of dollars on the table for Uncle Sam to kind of eat up and take. They're happy to pocket that. They're not going to be the one to warn you if you're giving them free money.
In this episode, we discuss some of the most important things that creators should be doing when it comes to their taxes, and some of the crucial things that they probably aren't. Now, you might already know everything that we're about to discuss today, but this is just one of those episodes that's good to watch to reinforce to yourself.
Yeah, one of the biggest ones that we noticed, like new first-time creators, when they enter the space, they're very bad about separating their personal life and their business life, right? Because they probably work from home, in front of a computer, because that's all you need these days, right? A webcam, laptop, and mic, and you can be a content creator. The problem with that is there's no office setting, so they just start commingling all their expenses. It makes it very hard during tax time to tell which ones are the business deductions, which one are the personal expenses. And two, if you ever get sued, if you ever go to bankruptcy proceedings, they'll do what they call piercing the corporate veil, which is they're gonna think that you did not do a good job of separating your personal business life. Therefore, if you got sued, they can come after all your personal assets. Which means if you had a car, a house, a boat, even, right? They can take those things to offset the debt that you have accumulated. That's definitely number one, right? Along with setting up, of course, a business bank account and credit card. Because if you don't set up a credit card these days, especially if you're from the US, you're missing out tons of points, right? There's great business card options out there, Amex, Chase Inc., that can really help boost up what I call that additional cashback revenue that you can be getting, right? A lot of more successful creators, that's like a 5 to 7% boost to their margins if they think about it, because they're getting it all back in cashback, right? Which they can use, of course, for any kind of flights, traveling, lodging, even cashback options, right, to their business when they're taking advantage of it. Of course, a third thing that I would say creators really need to watch out for is that they don't even do any kind of prior tax planning. So a lot of times creators, they're like, hey, April 15th, right? That's when taxes are due. That's the only day I'm gonna keep in mind. Well, by the time you hit February and March and you go to an accountant or a CPA, it's like, hey, get me the most tax savings you can possibly can. They're like, I can't do that for you. Why? Well, it's because you're already past the year end, my friend. Once you're past that year end, there's a lot of decision points that you can't make anymore. There's certain ones you can still do, so having a good CPA always helps, but certain things that's why you do good tax planning, right? You have to do them during the year of, or it's just too late by the time you hit that tax deadline period. And if you don't do good tax planning, you're probably leaving, depends on your revenue level, hundreds of thousands of dollars on the table for Uncle Sam to kind of eat up and take, and they're happy to pocket that. They're not going to be the one to warn you if you're giving them free money, right? They're in $1 trillion of debt, so they're happy to take it from you.
What's an example of something that creators probably could be doing the previous year before December 31st that they're not doing?
So a lot of creators use like a certain tech stack, right, to run their business. Whether that's like a lot of SaaS usage usually for like software that they use to run their business. And what they can take advantage of, especially if they're a cash basis business, is to go ahead and put those things on annual plans. What that does is allows you to take the whole year of expenses in one go. So if you pay for a certain pretty expensive software, like a recording software, it's $100 a month. That means that you can go ahead and take $1,200 of expenses ahead of time and probably also save you a little bit of money, right? Because usually if you switch an annual plan, they give you like that 5 to 10% discount on the plan. And if you're going to be using that for a year or longer, right? Like for me, I have Slack, I have Zoom, I have Dropbox, certain software we're going to use in our firm for a very long time. We're going to say, hey, we're going to go ahead and annually prepay those software, get the deduction the year of, so we can get a more favorable taxable income at the end of the day. Why go monthly on those things if you can lock up a better pricing and get the deduction ahead of time?
How early is too early to, do all this business setup? Because like most creators that are like smaller, they're just dabbling into creating or starting a podcast. It's not too big of a deal for them to buy a camera or a mic on their own money and then, see if it becomes something. Most people probably don't want to be thinking about that in the early days.
Yeah, no, that's a great point, because I think a lot of time this stuff is always back of mind for folks out there.
Nobody wants to actually do it.
Yeah, no one actually want to do it. They're like, hey, I just want to start my podcast. I just want to start my YouTube channel. I want to get it going. Why worry about taxes? Like, I don't know, I'm going to make any money yet, right? And that's fine. That's cool. There's those people that's stuck in the middle, I would say, right? Those people who are bringing in some amount of revenue. And for those folks, I would say like, even if you're just making, I would say like, $5,000 or $3,000 a month. So it's not like, world breaking money. I would advise those people who are actually bringing in real revenue to actually start planning a little bit earlier than those are just like, I'm not bringing any money yet, right? I have $0 revenue, so I'm just dabbling, right? That's the little break I want to put between. The reason is if you're bringing in any sorts of revenue, the government's going to want to tax on it. And if the government wants to tax on it, I want you to think this way. I don't want to pay taxes on it if I don't have to, right? Legally speaking, right? There's one important credit I want to introduce people if they don't know about, which is called a startup credit. The startup credit basically allows first-year entrepreneurs to take $5,000 of additional deduction just for being the first year of their business, right? So this can even be things that you're even thinking of like before you start the business, right? Like the pre-planning stuff, like, hey, let me do some market research on what's it like to start a podcast, or for my e-commerce folks out there, hey, I'm gonna go travel to China to sort out like what supplier is there. So that travel cost is deductible in that $5,000 credit. So that's a pretty big deal, especially if you're first year of business, you're not making a whole big of money yet, right? You don't want to pay a lot of taxes. So that's $5,000 that if you don't know about, you're not gonna take, right? Probably. And it's just that even though you bring in not too much revenue at that point, you want to make sure you're organized enough to take enough deductions so that you probably don't have too much taxes to pay because you don't have much revenue to report in the first place, right? The whole theme is not to pay taxes unnecessarily, not to give money away that's not needed. Keep as money in your pocket, right? Yes, you're small right now. Reinvest that money, right? Reinvest the tax dollar that you save so that next year you grow bigger, or you get to hire a couple contractors to scale it out. That's why I always encourage entrepreneurs that one, you can't afford to hire someone, or two, you don't want to handle tax, but don't ignore it, right? Still do something, file, even if it's like not the best, most optimized tax solution for yourself. It's better than not doing it and letting it just go on and on, right? And then to the point where you start panicking because you're so far behind that you just want to kind of wipe it from your memory.
Let's say they don't want to hire somebody. Where do they get started on things?
Yeah, so a very recommended accounting software is just QuickBooks, which I'm sure heard from most people watching out there. Another one is Xero. Another one is FreshBooks, right? So a great start is, of course, just getting your numbers organized.
Correct.
Make it all electronic. Make it all readable. All organized. Set up a chart of account, which just means like an organized way of telling what kind of expenses you have at your business. And put it in accounting software, right? Those things are really smart these days. You can link up your bank accounts and your credit cards to them, and then they'll be able to sync over all your transactions. And then all your job will be to organize it and code it, right? And put it in the right place. So if you want to do that all yourself, that's great. And then this way you can build up all those previous years and come up with what they call a profit and loss statement, right? Which states your revenue, your cost of goods sold, and your operating expense, and finally your net profit or net income. Once you have that in place, that's what you can take to file your taxes with, right? So if you want to do it all yourself, it just takes a little bit more work, a little bit more organization, but it's very possible to do all these steps yourself. You just got to read up on it, learn the tax code a little bit. Like I said, a blog, find some reliable one, because there's a lot of misinformation out there on like TikTok that I've seen from non-accountant, non-CPAs, and make sure you check your sources twice. And yeah, you can do those filings a year back. The IRS website is not the most user-friendly, I would say, but if you dig enough, you can get the right information to do your filings for prior years. The one caveat I want to bring up here is if you do wait long enough, they don't allow you to what they call e-file anymore, which just means submit your return electronically, right, to the IRS. They'll require you to paper file, which takes longer to process, 6 to 8 weeks and all that stuff to get a status back. If you wait long enough, this is the worst news. You don't get the refund anymore if you wait long enough, right? Say you actually overpay a year and you owe like a $3,000 refund. There's a statute of limitation on that. So IRS says if you wait long enough, this money goes back to the pool. So that's also another bit bad news if you wait too long.
If there's like 3 things that they should be doing to get started next, well, what should they be doing?
Yeah, so if you're kind of in the in-between phase where like, hey, I'm not sure this is going to work out in the long term, the content creating game, and I, of course, try and keep my W-2 job and, as a background, the 3 most important thing is, one, you kind of got to decide what is it you're trying to do in the future in the next kind of 3 to 5 years, right? Like the in-between state, I think it works for now, but what I find usually is people who are doing that, they just don't have the time to dedicate to their content creating side, right? And they're kind of doing it, half way doing it. So you kind of have to make a decision at some point where I'm going to lean, right? As far as like what I'm going to do. Is this just always going to be a side hustle for me, part-time, just a little bit of extra money for me each month? Or do I see this as the future way? Kind of at some income level, I'm going to commit to it. I think that's the kind of thinking you got to take. Number 2 is take advantage of the situation you're in, right? Because since you have a W-2 job, you kind of can play around with what they call the withholdings or the exemptions that you have, do a W-4 form, meaning that, if you know that your side hustle is going to bring in a certain amount of income, you can actually kind of like bump up or level up the amount of money your company's withholding for you. And what that does is it eliminates any kind of underpayment penalty that your content creating business will take on, right? So say like usually you paid, $1,000 a month off your paycheck to your W-2 job, bump it up to 2,000, right? Or like 1,500, whatever is appropriate. And what that does is you get tax extra on your W-2 job. It's going to show up as you're paying way too much, but then they're going to see that you have content creating income, and that's kind of level set. So that's a good way of kind of like playing around the numbers. Same with in a situation where like say, you're in a husband-wife situation, right? The wife is in content creating, the husband is an engineer, right? And working a W-2 job. The husband can also bump up his withholdings because you guys can be doing married filing jointly, and then kind of cover the taxes of the wife during the content creation, right? You kind of cover each other, go to a hybrid model. Number 3, most important thing is make sure you control your cash flow, right? A lot of time, people who are in content creation, they kind of go crazy on the equipment buying, cameras. If you buy a high-end one, they can be pretty pricey. Some people buy a lot of like props or outfits, right, that they could use on set and things like that. Like keep track of everything you're buying. Make sure you have some kind of tracker, keep receipts so that at the end of the day, the amount of money it takes to run this business, right? A lot of time, because these guys don't do any kind of bookkeeping, they look like they're making money, but they're not actually showing any profit, right? If they actually look at the books, they're like, oh, look at me, I'm bringing in $15,000 a month, but it cost me $25,000 to run this business because I have to take all these, business class flights all over to film these exotic animals for my exotic animal channel, right? And they don't know that. They just think they're bringing in a lot of cash and they're doing well, month in, month out, probably rack up some credit card debt along the way, pay it off, but then they're not actually profitable at the end of the day, or not as profitable as they think they are, right? Running this business. So just do in some way keep track of your numbers, even if it's an estimate, so that you don't at the end of the year it's like, I have no idea why I'm not making any money in this business. Well, it's because you didn't track anything properly.